All right, guys, back to work tonight. A wild session comes to an end. Hope you guys made some money out there. We had a fantastic day in our trade room. Hope you guys were profitable as well. But it's back to work, right? Tuesday evening, getting ready for what could be a very busy Wednesday trading session. Had some wild markets today, but not to worry. I have a lot of really great trades, very simple trade ideas that we're setting up for tomorrow. I'm going to cover all my favorite trades, of course, in tonight's video to make sure you have a game plan to make some money on Wednesday. Before we jump in and talk about all my favorite entries and exits for tomorrow, before we jump in, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in and supporting this YouTube channel. If you guys enjoyed the video, do me a favor, hit that like button. Thanks for tuning in tonight and supporting the channel. But enough of the intro, right? Wednesday is not going to trade itself. And I'll tell you, there might be some really good trades setting up for tomorrow. So let's get back to work here tonight. Where are the best trades setting up for what might be a very busy Wednesday tomorrow morning in our trade room? Had a kind of a wild day today, right? That big pop up early in the session, that big drop with the news coming out of Russia in Poland this afternoon. Kind of difficult at first, right? At first glance, you'll notice on the S&P and the Nasdaq, we have two trading ranges. When you look at the S&P or the SPY, the NASDAQ, and the QQQs tonight, at first glance, you'll notice, boy, this might not be the easiest chart to find some good trades for tomorrow, but don't you worry. By the time we're done tonight, you'll have a confident roadmap to make some money tomorrow, no matter what these wild markets throw at us. Two trading ranges on one chart. Anytime I see two ranges on one chart, it's an easy giveaway. I'm going to talk about the roadmap to make some money on these, on the S&P and the NASDAQ here for tomorrow. So you're not going to want to miss that in tonight's video. How about the oil? Boy, oil got that beautiful squeeze, that reversal we talked about in last night's video. But I'll tell you, the buyers have a lot of opportunity. But if they can't hold this thing right now, we're going to end up right back where we came from. So I can definitely see some great short opportunities right now on oil. I will definitely talk about some reversals, some long trades on the oil for tomorrow as well. And, you know, we've got that situation brewing right now in Russia and Poland, and oil could definitely be a powder keg, a very explosive situation for oil tomorrow. So we'll talk about kind of the game plan for some big moves on oil if things escalate for overnight into tomorrow. Now, speaking of tomorrow, before I jump in and talk about all my favorite trades for Wednesday, let's all get on the same page here, right, for tomorrow. Tomorrow is a Wednesday. The two known news events we're watching for tomorrow are going to be that retail sales number at 8:30 Eastern time. Probably not going to have as much pop to it as that PPI number had today, but you know, we saw that PPI number come down today or come back off its kind of all-time highs a little bit. We'll see how that affects the retail sales, right, that we have here for the month of October. So that is going to be the kind of the first big news we have of the morning. I don't expect it to be as poppy, right, as that PPI number, but it will be something to keep on our radar. Later on in the session, we have that weekly inventory report for oil traders. Remember, this is kind of the hardest part about oil trading is that weekly inventory report. I always try to avoid trades from 10:15 to 10:45 on Wednesdays. Let that news come out and whip around. And I should also remind you too, we are also watching rollover on oil. Probably it could be tomorrow, it could be Thursday, probably going to be either tomorrow or Thursday is the rollover on oil. We'll talk more about that, of course, as we get deeper into this video. And then I'm sure you probably have heard about this by now, right? There was a missile that was fired supposedly out of Russia into Poland. It killed, you know, two innocent people. Horrible situation there. This is very much, in my eyes, one of the biggest variables going into tomorrow, right? The next couple hours, the next 12 hours or so, how will Poland, the rest of NATO, the rest of Europe, US, will this escalate or will they take a very calm approach to this? That appears to be the big question mark for tomorrow. We saw the NASDAQ and the S&P tumble off the highs in response to that here this afternoon. That appears to be the biggest kind of known unknown for tomorrow is what's happening out of Russia, pull in how NATO and the U.S. allies are going to respond to that. If there's any response overnight, it's a big, big variable we are watching for tomorrow. That is one of the big kind of variables we're keeping an eye out. Then, as I mentioned in last night's video newsletter, don't forget, there'll be no newsletter tomorrow night. We will be trading tomorrow morning in our trade room as always, all week this week, but there'll be no video newsletter tomorrow night. I'll come back and we'll finish up the week on Thursday evening as planned. I hate to leave you guys hanging tomorrow night, but I got to be at the office for a couple meetings tomorrow afternoon. It's that time of the year again, right? End of the year prep work here. So retail sales, weekly inventory reports, and again, what's going to happen overnight? Will we get some more escalation, especially looking at oil? Because anytime the war drums get beaten up nice and strong, oil tends to pop, and so we'll definitely be watching for that here for tomorrow. So back to our charts though here. Let's go over all my favorite trades, S&P and SPY, NASDAQ and the QQQs, and we'll finish up here tonight on the crude oil or the USO. I'm going to jump in here to the S&P first here. Now, real quickly, this is a 10,000 tick chart. You can see all the time frames in the upper left-hand corner. They're all going to be tick charts, just so you know. And be aware, the S&P is very similar to the NASDAQ and vice versa. So everything we talk about on the S&P can be applied to the NASDAQ tonight and vice versa, right? So be aware of that. The Emini and the SPY are very much interchangeable with the NASDAQ in the QQQs. There are three key insights right now that are tipping us off to where the best money-making opportunities are going to be for tomorrow. There's that multiple trading ranges. I talked about this in the introduction. Anytime we see multiple ranges on the chart, think of this whole chart as one big trading range. And what happens is the market will try to rotate back and forth between these two trading ranges. Now, why is that important? Well, because ranges are balanced markets. Ranges act like magnets. So as we try to go higher, if the buyers can't get a breakout, we're going to run right back into that trading range. Buyers will be looking for breakouts going higher, obviously. If we go lower, right, the sellers, they're going to look for a breakout going lower. We'll definitely talk about breakouts going lower tonight. But if they fail, if they struggle, we're going to end up right back up into that trading range. We're buying low, we're selling high, and especially on the sell side, looking for breakouts right now here. Next clue is a strong move lower. This is why I said, especially on the sell side, anytime we see a strong move in one direction, we know the market wants to pull back and retest that level. Once they retest the level, do we see bears struggle and fail, running back up to take out that high? Or do we see bears hold that pullback and get a breakout running lower to key levels below us? Strong move lower makes it very difficult for us to want to buy off of that low right now. Okay, looking for a nice breakout going lower. I will talk about the buy side off that low, but it makes it a lot more realistic now or reasonable to keep this thing right going lower. And that brings me now to my third clue, which is the moving average. Now, we talk about this 21 moving average a lot in my video classes. We use it every day in my trade room. It's one of the only indicators I really would not want to trade without. And one of the things we always talk about is kind of who's holding the moving average. For example, you'll notice back here how the bears come and they jump right off that moving average. We talk about the jump off the moving average all the time, right? When I see the bears jump and run off that moving average with that strong move down, it gives the bears control of the short-term momentum. Now, the way the buyers get that momentum back is they have to get above the 21 moving average and jump themselves, right? You'll notice what's not happening though. Yeah, they're not jumping. Right? They're barely getting anything off that moving average. So what we have right now is we have a range-bound market with a strong blast going lower that's going to want to retest that low. And it's very clear that the buyers have been given ample opportunities here on this to back up, and they're not getting anywhere. Now, that may change overnight, but this clue right here really gives us a very bearish tone to this market right now, because in all reality, we should have been looking for that, that rotation back up here. So we're definitely feeling more bearish than bullish. That strong move down combined with the moving average clues And we know we have kind of this big range environment that we're looking for. So really at this point, the bears, right, are looking for breakouts going lower. And the bears would love to get some reversals up off the high, right? Buyers have a slim chance at getting a reversal. I shouldn't say slim chance, but the buyers were looking to buy the bottom, right, back up into that range, or buy the breakout going higher here. So we're going to talk about both sides of this because nobody knows what's going to happen here overnight, and I want to make sure we're ready for whatever the market throws at us here for tomorrow. When I think of a breakout going lower, right? When I think of a breakout going lower, there are probably 3 different types of breakout patterns that really kind of fit the mold in this specific situation. The first one is the easiest one. It's called a 1, 2, 3 breakout. I want to see a move back to that low. Let me bring this up a little bit here, right? If I can get back to that low, if the bears can come in and they can hold a pullback off the 21 moving average. Now, remember, they don't always hold it. Remember, this is one big trading range, right? So I can't just sell that pullback. But if they can hold it and really jump off that moving average now I have what's called a 1, 2, 3 breakout pattern. Remember, anytime we see a strong move, they're going to want to retest that low, right? So now we know we've got momentum. We're breaking out of that trading range. I can now find a resistance trend line, draw off that low, bring it up around that high. What I'll usually do in these situations is sort of pin it up around these bigger highs, almost like a little hidden channel there. And I like to look for that first touch or the first test of the high of that channel, right? Again, 1, 2 blast going lower. I draw my channel backwards off the lows. I pin it up around these highs, and I grab any of the entry patterns that you guys are learning in our free trading course, right? I love bull traps. I like buyer failures above the moving average, right? Pullback combinations. Again, the same stuff you guys are learning in that free trading class. And then don't forget, the first leg and the third leg are going to give you a really good target on your entry short. All right. So 1, 2, 3 breakout. Remember, we're not shorting the first one. We're going to short that follow up, right? Once it goes lower, that follow up traps, right? Buyer failures, same stuff you guys learned in the free course. The second of a breakout I would keep on your radar for tomorrow is the pop and grind, right? So it pops lower. It doesn't pull back to that moving average and jump. What it does is it now kind of grinds down and grinds down. These are an easy giveaway. Okay, what we want to do in these situations is draw a trend line down off those grinder lows, bring it up around these highs, and same idea, right? Look left. I always try to tell my students to look left, find some prior swings, right? And then because most of the time, that's where your best entry will be, right? It'll be above a prior swing for a bull trap. It'll be above the 21 moving average. Once the buyers get in, we can sell into those stops. With a failure, I can grab a pullback combo off the 21 EMA, right? Again, trap, failure, pullback, first leg, right? First leg, third leg, going to give you a really easy target as we go, right? As we go lower there. That's the pop and grind. Another very common breakout pattern would work perfectly in this situation. Another situation you want to keep in mind is if we saw a really big move down, right? You know, again, remember this situation happening in Poland and Russia, it may quickly escalate, and that may cause a very big collapse, right, overnight. Whenever I see a really big collapse or anytime I see a really big move in one direction, obviously we want to stay focused on the short side, right? Strong move down. We want to focus on the short side. What I want to do though is try to anticipate a relatively deep pullback. What you have to remember is when markets, for example, we saw that big move going higher today. Nobody wants to buy way up there. So what we do is, and we did this morning in our trade room, was we waited for those nice deep pullbacks, right, and kept buying the dips. It was a pretty easy job. Anytime we see a big move up, we want to be a buyer. Obviously, eventually it rolled over, but not until after we found a couple really nice, right, long setups. So you've got the strong move up, but nobody wants to buy high, right? They want to buy low. So we want to wait for it to pull back. Same thing going lower, right? If it really tanks overnight, we're not going to chase after it, right? We're going to wait for it to pull back. And the easiest way to make money in these situations is go out and simply look for prior resistance. Find some larger channels, right? Get up into some overhead levels of resistance. We'll talk more about this in specifics tomorrow morning in our trade room. But the one thing you want to kind of keep in mind is if we see a really, really big move overnight, big move down, don't chase it. Don't try picking bottoms. Wait for that pop up, right? Wait to get. And what I always tell my students is because the question is how deep of a pullback do you need to get for the entry, right? How deep is deep enough? And the answer we told everybody this morning in the trade room was once it feels like once it feels like it's a bullish reversal, right? So once this thing starts to accelerate and start to really push higher, that's usually a really good clue that you've got this on the right track. And now's the time to go in. Let those buyers come in, try to buy off that 21. And now you've got their stops sitting right where you want them. Remember, think about it. Strong move down, big move down. They're going to want to retest that low. We don't want to chase after it because it's such a big move, right? We wait for that nice deep pullback. How deep? Usually it'll be in other levels of resistance, right? Kind of channels coming down, right? There'll be some bigger channel. There'll be some bigger levels. We'll nail that down tomorrow. The key, though, is once that little voice in your head starts saying, oh boy, maybe this is a reversal, right? It probably is not a reversal. But again, when to rope in some of those buyers, use their stops as fuel, right, for a classic failure pattern. As you guys know, we do a lot of trading with failures in our trade room. It's one of my favorite go-to patterns. We covered this in that free trading course, which reminds me, if you're watching for the first time right now, if you haven't learned all of these entry tactics, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take the free trading course because the strategy that I teach in that free class will show you a remarkably simple trick to know where the best trades will be each day so you know where to get the winners. And most importantly, you'll laugh when you see how easy it is to figure out where the losses are more likely going to be, right? So grab that free course. If you're missing the best trades each day, if you're taking too many losses, the roadmap I teach in that will give you a lot more confidence and it'll give you a roadmap to follow each day. Start making some money in these markets right now, right? Perfect for someone trying to make the jump into full-time trading, right? So grab that link that popped up there in the upper right-hand corner. That way, the next time we get that strong move down, right? That strong move down, you'll know what a good failure looks like. You'll know how to time the entry properly, right? And then back down to retest the low. So those are 3 breakouts that I would keep your eyes on here for tomorrow. Now, the next big question is how do I buy it off of that low right now, right? That's one thing we haven't talked about. And I also want to talk about if the market goes higher, right? Because there could be some really, really good trades, short trades off the high, and possibly some breakouts going higher here as well. Now, the big problem we have as the market goes lower is what? It's momentum, right? It's momentum. Momentum is going to be pretty bearish if we end up rolling over and going lower. And with that lingering issue from Poland, Russia, NATO, US, right, and the crew, that really does put a little more of a bearish tendency here until we know something more here right now. So really the only way in which we can be comfortable buying off that low, you are looking at it right there, right? Classic crown reversal, strong move down, bears try once, bears try twice, all the stops are sitting right there. And again, this should have ripped and ran higher, right? That should have been a nice rip back up into that trading range, and it wasn't. And that again is a very good clue, very big clue of just how heavy this market really is. So as we take out those lows now, if I can get those bears to try once, if I can get those bears to try twice now, think about now where their stops are. And once I see those bears commit, remember, it's basically one big trading range. So it's not a very good spot to be a seller at those lows, but if we can get some rookie traders to take the bait, selling short out there, again, I'm not going to sell into that low as much as I would love to right now with that news out of Poland. I definitely want to wait for the bears to hold it and go. But if they can't hold it, right, if they can't keep it going, we're going to have that stop run and they'll go right back up into that trading range. That is going to be pretty much at this point the only safe way to be a buyer off of that low. I definitely don't want to try picking a bottom on this low right now. So that's how I want to buy this thing off of that low. Take out that low, trap in some of these bears, right? Let them dig their own grave and use their stops as fuel for that run going higher. Now, as we go higher here, Can I sell it? Absolutely can sell it. Can I buy a breakout going higher? We have a lot of open space above us on the S&P and the Nasdaq. We're very bearish right now, but this could easily change. This could easily change overnight. Let's talk about the buy side and the sell side as we go higher here on the Nasdaq. The Nasdaq, of course, and the QQQs. These are very similar to the S&P and the SPY, we have basically the same exact key insights, right? We've got two trading ranges. That creates one big trading range overall. We have a strong move down, which suggests a retest of that low, then possibly the breakout going lower or the bounce back up again. And of course, you've got one of the biggest clues on this chart, which is the moving average clue. The bears come in, they jump off that moving average. The bears, of course, have control once they jump off the 21 EMA. The buyers are given plenty of opportunities and they've done nothing with it. So we definitely can assume now the bears have control until the buyers can get their own jump going back above us. So going lower right now, a lot of this is the same thing, right? As we go lower to try off that low, as we go lower, 1, 2, 3 breakout, going lower, pop and grind, going lower, or if things really get out of control, right, and they drop, we're waiting for that deep pullback, trapping those buyers and back down to retest the low. Pretty easy game plan. We talked about that on the S&P. As we go higher now, if we go higher here, what's the game plan now to short the highs or to buy the breakout? Well, the short off the high is, at this point in the game, what seems to be more likely for tomorrow. Doesn't seem very likely right now with that lingering issue in Poland. We're going to be making new fresh highs here tomorrow. But again, I have no idea what tomorrow will bring. I simply want to make sure I'm ready for anything the market throws at me. Now, the move going higher is pretty easy to structure a short. If we can get back up around these highs up here, now the key is that classic crown reversal, right? The double top reversal and the V top reversal. Okay, let's talk about those, right? Kind of three different ways to short this sucker. Again, you want to get up into an area of resistance. Now, if we rotate and go all the way higher here, that's going to be a very strong what? A bullish momentum clue. If I want to be a seller, I'm going to have to get some sort of edge. And to get that edge, we need to run some stops. We need to get some sort of stop run to give us the edge back down again. That strong move, that will want to retest the high. Let those buyers try once, let them try twice, and grab that crown reversal off the high, right? One of my favorite reversal patterns whenever we have a strong move that hasn't retested yet. Okay, that's the key. Strong move, hasn't retested yet. We let the buyers try twice. Let them wrap that noose around their neck, if you will. Their stops are sitting right below that low. And then once we see that nice juicy signal candle, you guys learn about signal candles in the free trading course. Once we see that juicy signal candle, boom, right? Drop it back down. Targets, of course, now back into that trading range. Targets, of course, now back at the other side of that big trading range as we go. That's one way to do it. Another way to do it is as we go higher here, let's say, for example, the buyers come in and they buy the pullback and they retest the high. Perfect. Mission accomplished. Once those buyers retest the high, now we can get a little bit more aggressive on the entry. We no longer need that crown reversal, but we do need to rope in some of the weak hands. Think about it. As we go higher, the smarter money buyers are going to buy low. Right, but as we retest the high now, the smart money buyers are taking profit, assumably, and now they get kind of the dumb money, right? The weak hands, the inexperienced traders coming in. This is where the fun begins. As the buyers start to struggle, one try, two try. I like to use two tries. For me, it works great to start to see signs of exhaustion. I know that a bunch of stops are sitting down here, and I can basically sell into those stop losses. That two try failure will trigger that reversal going lower. And then don't forget, as the market now tumbles back down again, don't lose sight of where we're trying to go, right? It's one big trading range here, and they're going to want to take out the other side of that range, right? So don't just sit on your hands and watch. Mark that low, mark that high, and as always, find those prior swings. Grab that bull trap, grab that buyer failure off the high. Whatever you do, don't miss that first test off the high of that channel, right? So again, this one, strong move up. They retest the high, double top or a little bit through the high is fine by me. And then we rope in some of the weekends. Buyers try once, buyers try twice. And then as it rolls back lower, don't miss that first test off the high of that new bear channel. And again, that channel is drawn by connecting those lows. All right, one more short off the high. What does it look like? The V-top. Right? The V-top. You could definitely imagine a V-top reversal could be happening in this, especially with this big range here. So again, now let's say we go up. But now we don't get we don't get that 1-2 crown reversal. No, we don't get a retest of that high. No, the market basically pops up, and before we get a chance to do anything with it, it comes right back down again, right? Kind of slices right back through and begins to grind back down again. Where does the market want to go at that point? Remember, one big trading range. It wants to go back to the other side of that trading range here. Once I get that grind, the grind is a really easy giveaway. Just mark off those lows, mark off that big high, and again, as I mentioned earlier, look left, find some prior swings. Don't miss that first test, right? The first test is the best test. It'll put you above the moving average for a trap, above the moving average, or I should say above a swing for a trap, above the moving average for a buyer failure, right? Into a pullback combination. And that would be what should be a very easy winning trade there if we can get that V-top and that reversal back down again. So plenty of ways for us to make some money shorting off that high here. The key is going to be, can the buyers hold it, right? That's the big question right now. If we do end up rolling higher here, right, can the buyers actually hold that pullback and blast? Again, it doesn't seem likely right now, but anything is possible. We should know that by now, right? Anything is possible right now. It's a crazy world out there these days. We've got a lot of open space. Look at that wide open space on the NASDAQ. S&P has just as much wide open space here. So again, we take out some of these highs up here. They pull back to the moving average. We don't struggle and back in. No. The buyers come in. And again, there might be some good news tomorrow. Retail sales might be on fire tomorrow morning. Maybe Poland says, it's okay. We're not upset. Right? There could be peace. There could be prosperity. I'm saying? There could be some really big change in sentiment right now. We heard some good inflation numbers last week and today. So who knows, right? This could easily catch a bid and rip higher here if they can hold that pullback, right? And we can really get that run going high. Remember, I can't buy that first pullback. I'm sorry, I can't do it. Not a good trade, right? Not up around those big highs like that. But if they can hold that pullback and jump, that's the key. They got to jump off the moving average and jump clear through these levels of resistance. Now we have what? A strong move going higher. We now know the odds are very good. They're going to want to retest the high. We find that new channel by drawing it backwards. We mark up those swings and we drill down to find any of my favorite entry setups. I like traps, failures, pullbacks, and then don't forget again, the size of that first leg, right? Size of the first leg, size of the third leg, right? So if this leg going higher is really nice and big, right, we could easily see a very, very good run going higher there. Okay, the first leg, third leg technique is a really easy way to time, really one of the perfect entries to squeeze out more profit out of that runner. All right, and we'll talk more about trade management and things like that inside that free trading course that I mentioned before, which, by the way, if you haven't grabbed it yet, grab that link up there in the upper right-hand corner. Another one, which doesn't seem to be as likely here right now, be a pop and grind, right? So it pops up. There would have to be something very significant that would cause this thing to grind going higher. And the reason I say that is because what makes a market grind going higher is sellers getting out, right? So it might, it might pop up and grind up like this, right? As bears get out of those positions, that may pop up and grind up like that. And again, we're still looking for that crown reversal off that high, but that'd be another one too, right? Kind of that pop up and they grind going higher. Doesn't seem as likely, right? That would require a very big pop-up and they start floating, right? Kind of fluttering as it goes higher here. Probably not going to happen tomorrow, but again, who knows, right? We'll mark up that high, mark off that big low. Remember, it's a very strong move. It's going to want to pull back and retest. And of course, I can go out and find that prior swing, right? And grab my entry off of that low, that pop and grind. What's more likely right now, though it seems, at least for right now, is that 1, 2, 3 breakout, that big pop up, right? That pop up, hold the pullback, right? And then get that jump going through. That seems a little more realistic here right now, right? We'll see what happens though, right? Again, so pop and grind, going higher. It would be a pretty remarkable move for it to really rip, really rip going higher. But if that happened, right, if it was a really big move overnight, right, with that deep pullback, trapping those bears, and look for that retest from there as well. We'll talk more about those details tomorrow morning in our trade room. But keep an eye on that for a breakout going higher. Again, right now seems more likely if we do go higher, we're looking at that short back down again, but we'll keep an eye on those breakouts. Looking good. I think we have these all covered now on the Nasdaq and the S&P. We now know how to trade the breakdown going lower. We know how to buy it with those reversals off the low. We know 3, 4 different ways to make money as we go higher here. The key right now will be kind of stay out of the middle. Stay out of the middle, right? The bigger profits, the easier money will be up, back down, right, back up, or the breakouts, right? The breakouts in both directions. And we'll see what happens here overnight, right? Coming out of Poland and kind of what the reaction is regarding that missile strike. Those poor people dying in Poland. My heart goes out to them for sure. Over on the oil now, right? Wrapping things up here on the oil tonight. Don't forget, we are watching rollover right now on crude oil. This is the 12/22 contract. We will roll forward to the 01/23 contract. It could be tomorrow. It could be on Thursday. Once you see the volume is higher on the January 23 contract, seems crazy. We're talking about January. This is always how it goes, though. Oil is always the first one to roll to the following year. Remember, oil's every 1 month, so it's going to be. Once the volume is higher on the January 23rd contract or 23 contract, we'll make the move over to it. Might be tomorrow, could possibly be Thursday. We'll find out once we look at the volume tomorrow morning. Second big clue right now is a strong move higher. It's a real strong move up, right? That strong move up had a range, right? They broke out 1 leg, 2 leg, 3 leg. Remember how I said earlier, the first leg and the third leg are very symmetrical? That's a really good example of kind of, 1, 2, 3, 3 legs. First leg, third leg are symmetrical. This one is a situation where it's all 3 are very symmetrical, right? 1, 2, and 3. A lot of times it's first leg, it's a small middle leg and a symmetrical third leg, right? Where first leg and third leg, where that middle leg is kind of the oddball, right? So strong move up, goes higher here. Market goes 3 legs higher. I want to leave that on there so you guys can see how that works here tonight. It's not a huge clue right now because it is a very the measured move that is. It's a very strong move up. They're going to want to retest that high. Right? Once they retest the high, if they can retest the high, then we get a great possible double top reversal, right, as we go. Or if they do want to rip it higher, and again, this is where the situation happening in Europe right now is very important because as they try to go higher, there is a ton of overhead resistance up overhead. They're going to really have to show us they mean business going up overhead. There's a lot of big tops up there that they're not going to be easy to break. But again, if we keep seeing more escalation overnight, war tends to bring out the best in oil, right? Unfortunately, it does. So we've got that potential pop-up that wants to retest there. And you'll notice, too, the buyers also tried twice. So as we go higher here, right, look how the buyers came in, tried once, tried twice. You have to think right now, they haven't got that trap high yet, right, for that crown reversal. You have to think there are going to be a lot of bears right now, right, at least until we know more, looking to short this trap above that high, right? It's a very strong move up, right? So like I said before, right, when it makes a strong move up like that, it's 1, 2, trap and go, or it's a retest of that high and then 1, 2, back down we go. So you have to think that trap up there around that 87.90 level, at least for now, right? We'll see how the overnight session goes here, but they just have to think that's a really desirable spot there for some bears to come in. And of course, the range below us, right? The range below us is still a magnet. And basically, if these buyers, if they keep struggling here, we're going to end up right back down into that trading range. And remember, whenever we have a range market that breaks out and goes all the way back into that trading range, that momentum builds like a freight train. And oftentimes, it'll just run right through that trading range and turn into a pendulum swing. Remember, we're still watching that 81.30. 81.30 is still the big objective for the bears here. And I'll bet if you took a look at how big the market went above the range and projected that down, where does that put us? Any guesses? Oh, surprise. What a coincidence. 81.30, right at that low. Now, it probably is a coincidence right now, but that is potential for that slingshot going back down in the opposite direction. So how do we make money on this? This is relatively simple. It's relatively simple. If we go higher on this, right, we've got that potential trap high for the short above 90. If they retest the high, then it's simply a 1, 2 back down, right? Find that hidden channel and short that sucker back down again, right? This is nothing new, right? We've talked about this. Double top reversal, trapping those buyers, right? Get those buyers to come in and get long. Once they start to struggle, their stops make for easy fuel for that run higher. And then again, we look for that trap, that failure, that pullback combo off the high of that new channel, right? That's a really great way to do it. For a short, buyers come once, buyers come twice, right? That trap. Now, remember, when it comes to traps like this, we really have to get that strong signal candle closing below the moving average. All right. We talk about signal candles a lot in that free trading course. So I would definitely recommend, if you haven't done that yet, there's a whole video chapter on traps, right, in that free trading course. You'll want to make sure you know that signal because it's going to be important on this one, right? That possible short signal going back down into that trading range. Those are some easy ways to short this as it goes higher. I would also imagine, too, that if we were to go lower, let's say the market keeps on grinding down, get rid of this trend line there for a moment. Let's say, for example, we keep on kind of grinding down here, right? This becomes pretty easy. Draw that trend line, mark it up off that high, and you know everybody's looking for, right, that short off the top of that channel. And again, I'm really simplifying this right now, right? We'll drill down. This is a 1500 tick chart here right now on this chart. We'll drill down, look for trap entries, buyer failures as we get above the moving average, right? And then pull back combos, right, off the 21 EMA. And again, you're going to learn more about those entry patterns I'm talking about in that free trading course. So watch that thing grinding. And then what do you think too? What if the market kind of dropped and really made a big move down? What would you do in that situation? Well, first of all, it's a really strong move, right? So the odds are pretty good that as we go back up, what's going to happen? Yeah, bears will come in and sell it back down again. I think that trend line becomes your best friend in that situation, right? That trend line that came up off that low I had drawn on earlier, if we really got that real strong move down, really collapses back down into that trading range, I would definitely keep that trend line on there and wait for a bounce, right? Wait for it to bounce up, get up into an area of resistance. That will put us under, or should I say above the moving average. And remember, anytime we see a real strong move like this, they're going to want to retest that low. If I can get some buyers to come in and try to buy off that pullback, you now know exactly where their pain is. You now know exactly where their stops are. And now we can look for that failure pattern, right? Basically sell right into those stops to go back down to retest the low. It's a pretty easy trade, right? So that's something to keep an eye on as we go. Or let's say they do run back into that range, we begin to grind down, right? Stuff like that, easy, right? Again, we know the market wants to go back to that 81.30 level I talked about earlier. Mark off that low, mark off that high, and don't miss that short, right, off the high of that channel, right? Get a couple different options there as we go lower here, all right? What I like the most about it is if we do end up going lower, now again, again, we have that big pendulum swing, that freight train. So if it does make that move lower, pop up, failure, back down again. If it pops and grinds down, so we wait for that bounce, right? And we're shorting off the top of that new channel. Pretty easy as it goes lower. The big question right now is how do we buy it if it goes higher? I'm not a really big fan of the buy down here, right? Not a big fan of the buy down here. And the reason is because all of that momentum, right? That range is a big problem for these buyers down there, right? So I'm not a huge fan of this. The way you would do it would be a crown reversal. Right? If they ran back to that low, it'd be a crown reversal, right? A 1 try for the bears, 2 try for the bears. When there's a range involved, when there's a range involved, that pendulum swing tends to be a little bit too strong, and it makes it difficult for us to grab that reversal. It worked here, right? It worked here, you'll notice, right? It worked there, that's fine. It worked great there today. But remember, that's a different situation though, right? That was off that big low. That was off that, remember that from last night, right? It was a retest of a low. It made sense to be a buyer at that point. At this point, though, it doesn't make a lot of sense to buy that low in this current situation until something changes. Okay, just be careful as we go lower there. And then as we go higher, it's a pretty simple idea. We're going to have to go take out these highs. The buyers are going to have to come in and either hold this pullback and really rip this thing, right? And again, this will usually be accompanied by some news headlines. There'll be there'll be more escalation. This thing's the missile strike in Poland. There'll be something else going on. They'll be causing this thing right to want to spike. If we can get that strong jump off the moving average, that strong move will want to retest. I can find that new channel, right, and then buy that channel low, right? And again, I'm not going to go over all the entry patterns again, but I'll look for one of my entry setups off the low of that channel, right? And again, right, first leg, third leg, if we can clear above this big cluster of resistance up here around 90.5, we have quite a big open space up there, right? So, on its best days, oil might do, $7, $8, right? On its best days. On a good day, $4 or $5, right? So $7, $8, $10 will be an enormous move. 86, 82, we'll call it 87, right? Up around that 93. So that's a $6 move or so, right? 87, 93. It's not totally out of the question. Right, definitely possible, especially if the war drums are beaten. Right, if this thing starts to escalate there. So definitely looking for a 1, 2, 3 breakout going higher. Find that channel, dig in, and buy that low. A pop and grind possibly, right? Some news comes out, it pops up, it grinds higher, right? Grinds higher. Those are pretty easy as well. We're not going to chase it going higher, right? That's a fool's mistake. We want to wait for that nice pullback, right? And again, when you get that pullback, it'll oftentimes go just below the moving average, right? And that'll be enough to trap in those bears, use those stops as fuel for that run back up to retest that high and potentially a move all the way up into that, 93 level that I mentioned before. If the market was to just simply spike, right, and rip and run higher, what do? You find a bigger channel, right? A bigger channel, right? You wait for that deep pullback. How deep? How deep? It's usually going to be once that little voice in your head says, oh my goodness, maybe it's a reversal. Once it feels like a reversal, it's probably not going to be a reversal, not with a strong move up like that. Trap in those bears, right? Let those rookies get short, try to pick that top. Meanwhile, you're buying right into those stop losses for that run back up to retest the high. Remember, big moves are great, but you got to wait for that deeper pullback to attract in more buyers. And then don't forget to, one last thing before we wrap things up here tonight. Let's say it did reverse, right? Let's say it did reverse. Strong run up, right? Strong run up. And then as we pull back now, it just slices and begins to grind back down again. That is not very common. Right, but it might happen, and something like this might happen on the S&P and the Nasdaq tomorrow again. Right, remember that big pop up, that V top? What do? You mark off that low, you mark off that high. Once it begins to grind, right, that's the giveaway. Right, if it rips higher and then kind of evaporates V top into a grind down, it's a pretty big clue. It's a pretty big clue that for whatever reason, what caused this thing to spike is no longer important. And then, of course, we got to look for that new channel, and we don't want to miss that first test off the high of that channel. All right. I would be pretty surprised if that happens. But again, my job is not to predict. My job is to rehearse the different scenarios, plan my trades. That way tomorrow, I don't need to be emotional. I have a game plan. You'll have a game plan to make some money as well. And of course, we're going to do it tomorrow morning in our morning trade room at 8 o'clock Eastern time. So plan is also to go here on the oil, on the Nasdaq, and the S&P tomorrow morning. Don't forget, if you're not getting the results that you want out of these markets right now, if you're looking for a great place to come out and learn and trade along, I have the entire system ready for you here. Our morning trade room every morning, 8 o'clock Eastern time. I have all the software templates to make your charts work and feel just like my charts. And of course, I provide a copy of the trading plan and all the rules. It's very easy to sit down, kick some butt, and make some money with us every morning in our morning trade room. I'll put all the membership links in the description of the YouTube video. If you're here for the first time, I would definitely recommend take the free class first. Get the ball moving there. That way you can get a taste of what it's like in our morning trade room, the strategy that we use every day in our trade room, and they'll get you primed and ready for making the jump into our trade room as a brand new student. Don't forget, if you have any questions at all, the easiest way to get help with anything is to always call the office, send me an email, or use live chat on the website. I definitely don't get a chance to reply to YouTube comments as fast as I would like to. So if you need help with something, shoot me an email, right? Jump on Skype, right? Give us a call or use that live chat. I'll be able to help out much faster that way. All right, guys? We'll see you guys tomorrow, 8 o'clock Eastern time. Be well, be nice to each other. And again, no video tomorrow night. We'll come back, not tomorrow night, but on Thursday evening to wrap the week up with Friday's trading session. As always, guys, be well, be nice to each other. Be here next time. Adios, amigos. Bye-bye for now.